Arabian Mills is a Saudi company, and we are one of the leading providers of wheat-based products, which is flour, feed, and bran. This company was part of GFSA in 2021, and post that, we went through a privatization program through our shareholders of Ajlan and Brothers, Al Raji International, and Nadic. Post that, what we've seen is a privatization journey wherein we've performed extremely well in the past 2.5 years, where we've grown our revenue, profitability, and our cash flow. In these last few years, we have seen very good growth happening across our product portfolio, and our customers are really happy with the way we have sort of delivered on our performance. Uh, with the fact that we have got one of the largest wheat milling capacities in KSA, and also if you look at Riyadh, it is the largest plant available today in entire KSA. We are well positioned to take care of the future growth strategy and launch several new products to cater to our customers' requirements, not only in flour but in feed as well. If we understand the product portfolio in which we are currently operating in, we operate in the flour, uh, feed, and the brand category. Flour is our biggest contributor, which can be further subdivided into the B2B and the B2C. B2B is the subsidized flour, while B2C is the unsubsidized flour category. So within that, what we've done is the in the subsidized flour category, we've gone ahead and acquired a lot of new customers on the basis of our high quality of products, and that has given us good advantage in terms of acquiring and retaining a lot of loyal customers. Whereas in the B2C segment, which is the sub 10 category, 10 kg category and below, we have revamped our entire portfolio by revamping our brand name as Fina, uh, and further offer differentiated products in the market, which are being very much liked. And through various social media campaigns, we've been able to build this brand since the privatization journey. That has given us a sort of growth in the flower segment. Now, in the second segment, which is the feed segment, it can be broadly classified into livestock feed and poultry feed. So what we've done is that in the livestock feed, we've gone ahead and launched several new SKUs, which are high value added differentiated products, which has given us a robust pipeline of products catering to various requirements. We were earlier not present in the poultry feed, but what we've done over the past 6, 7, 8 months is that we've launched the poultry feed successfully in the market. So as a result, today we have gained in terms of our market share in the feed category as well as a result of what I just explained. In the third category, which is brand, we have an industry leading position with a high market share, with a leading market share today. And therefore, across all the three product categories which we currently operate in, we have grown in terms of market share. The other area is we have got a strategic presence in Riyadh. And as we all know, there's a lot of action happening in Riyadh. It's a growing market with a lot of tourism happening. And there are a lot of food service channels which are mushrooming in Riyadh. So, as a result of which, we've seen a very strong growth in Riyadh, and we are very well positioned to take care of our milling capacity utilizations, which is added to the growth story of Arabian Mills. We feel this is the right time to go for an IPO because what we've seen over the past 2.5 years is a very successful journey wherein we've not only increased our market share, but we were able to launch several new products, and we've sort of optimized our milling downtimes and milling performance in a very positive manner, which has launched several new brands as well, invested in people, invested in technology, and all these areas have positively resulted in enhancing our revenues, the CAGRs, as well as the profit margins and the cash flows. So that has given us a lot of confidence that yes, this is the right time to further grow and consolidate our position in a Saudi economy, which uh, incidentally is one of the fastest growing economies and one of the largest economies in the GCC, which is backed by a lot of growth in the tourism in terms of population. So it is well poised to further grow. And we want to play an important part in this journey. And therefore, we are looking at inviting new investors who can partner us both in terms of institution as well as retail investors to help us and partner with us in the next phase of growth, which we are very excited about. Well, yes, this is a secondary sales. Uh, Having said that, I would like to mention here that we've done extremely well over the past few years since privatization, and our existing shareholders, led by Ajlan, Al-Raji, and Nadek, are quite happy with the professional way of working and the way we've sort of unlocked the potential of this company. And they want to give an opportunity to new investors to come in and progress in the growth journey of this of company. In fact, we have robust cash flow generation to the extent that we went and prepaid a significant portion of our debt at the end of 2023, uh, which sort of ensures and sort of gives the confidence to all the investors and the shareholders that we are well equipped to take care of any future growth expansion plans, be it in terms of capex or in terms of deleveraging our debt. Well, in fact, we've done pretty well. Uh, we've got industry-leading margins compared to our peers and competitors. We had a gross margin of 48 percentage in 2023, an EBITDA margin of 44 percentage, and a profit margin of 23 percentage, which are industry-leading in the landscape in which we operate. Not only have we sort of sustained these profitability margins since privatization journey began, but also we have continued to gain in terms of the market share. So this is a good balance, what we're sort of delivering post privatization. So our strong bottom line performance has been driven by several factors. Firstly, in terms of our capacity utilizations, we have significantly enhanced it post privatization. We have reduced the downtimes of our mills, and we have looked at all areas which impact cost in a very uh, detailed manner, utilizing technology and efficient tools and techniques to minimize the costs, and that has significantly impacted our EBITDA margins in a very positive manner. Secondly, in terms of a focus on non-subsidized products, we have focused on increasing the volumes, but also the average selling price, which impacts our bottom line in a very positive manner. Thirdly, we are focused on increasing our market share in all the three categories of flour, feed, and brand. And fourthly, we have looked at how to utilize our capital in a far more efficient manner. Well, we are very happy with the performance we have delivered in the first half of the year. So we've seen revenue of 465 million, which is at 16% growth versus last year. In terms of bottom line, we delivered 102 million, which is at 41% growth versus last year. So it has been a very strong performance, and we are very happy about it. Within the categories, if we look into it, uh, we launched the poultry feed successfully, and we've also managed to diversify the livestock feed. So that has given us good growths. In the flour category, the growth was primarily led by B2C, which is where we have been focusing on, which is the unsubsidized category. And in the brand category, we've sort of consolidate our position as a number one player in the market. So that gives us a lot of confidence when we head into the second half of the year, H2 2024. Well, actually, we have a very balanced portfolio between subsidized and non-subsidized products. If you look at between 21 and 23, the non-subsidized products contributed 46 percentage of our revenue, which basically comprises contributions from feed, brand, and the B2C segment. So in the near term, we do not see any dramatic change to happen in this portfolio, but we are very confident in the way we are proceeding to enhance the contribution of the non-subsidized category and increasing our market shares in these respective categories. So we've seen a very positive outcome of this in our H1 performance, and going forward, uh, this will continue to become better in the coming years as well. Well, we are well poised to pay dividends to the shareholders in the coming time, subject to the board approval. So we have adequate amount of cash flow to take care of that. In the past few years, we have been focusing on deleveraging our debt position, which was a priority area, and we have been successful in doing that. And that has given us adequate leeway to go ahead and pay dividends in the coming time, subject to board approval. Yeah. So, well, our priorities is to consolidate the good work we have done in H1, carry on that strong performance in H2 2024 and beyond. And in the next few years, we are looking at enhancing our capacities in both flour and feed. So, a lot of work will continue to happen in that direction. Secondly, we have been working on a robust portfolio of launching several new products such as gluten-free range, Chucky Fresh, atta, pasta, semolina, cake mixes, etc. So this will be part of the expansion strategy as we proceed. Um, we will also be looking at geographical expansion by getting into the west, Jeddah, Makkah, east, Dammam, and Tabuk in the north. That will enhance our distribution range in a significant manner so that we can leverage the full opportunities in KSA. And lastly, but not the least, we are focusing heavily on enhancing our customer base and growing our market share.